A new report from the San Diego Union Tribune shows that San Diegans are not jumping to buy homes even with lower mortgage rates. According to figures from Adam Data Solutions, the median home price in San Diego County fell by 1.7% between September and October, now hitting $875,000. That's compared to a peak median price this year of $903,000 back in June. Inflation is still to blame for the lack of home buying. According to a finance professor at San Diego State University, insurance costs are still high and scaring many people away. Well, housing affordability is front and center for the Trump administration, with a handful of new ideas being floated right now. And it comes as San Diego still struggles with home values and new buyers. Joining us now to talk more, we have Jim Bottrell, the founder of the Jim Bottrell Real Estate Team. And we want to thank you for being here, first of all.
Thanks for having me.
Okay, so let's talk about this 50-year mortgage that we've been hearing. Would that work?
Yeah, actually, there's people out there that are talking about it's a terrible thing, it's a great thing. I actually think it's a great thing. People need to understand it's not replacing a 30-year mortgage. It's just an option. So people, they're qualified on what the house payment is as a percentage of their income. So imagine two different scenarios here. If there isn't a 50-year option. So people go out, they find their dream home, they love, 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 they dream it, and then it's awesome. And then the lender says, I'm sorry, the payment on this house is too high for your income. Sorry. Now, with a 50-year mortgage, that same lender can say, I'm sorry, we can't qualify you on a 30-year loan. However, we have this 50-year loan option. The payment's actually $200 a month less. Welcome home. It's just an option.
Okay. We've heard the term portable mortgage. For some people who don't know what that is, tell us about that and who could it work for?
Well, portable mortgage is actually really awesome. I don't know how they're going to pull it off, but I would love it if they can, because think of all these people that have owned homes prior to 2021. They all have a 2.5% mortgage rate, right? I mean, they all refight into those. And what's happening is they are what's called rate locked. They're not moving. Right, there's inventory of houses where those houses don't fit their needs anymore, and they're not moving. So it would allow somebody to take that 2.5% mortgage and move it to a new house. Now, the problem there is when they signed that loan, it had an address on it. So they would have to, even if it's legal, right, that lender would have to allow that mortgage to move to a new property, which would be great because, like I said, these people are rate locked. They're not moving. Their house doesn't fit their needs. They've got 5 kids in one bedroom, or like we ran into not too long ago, an elderly couple that can't go up and down the stairs anymore, but they're not selling their house because they have a 2.5% mortgage. There's families who need that house. So they would allow them to pick it up and move it. Now, I don't see how it works because the actual lender, honestly, they don't want anybody to have these 2.5% loans anymore. They want them to sell that house and pay it off, right? And they get the hundreds of thousands of dollars back, and then they loan it the next day to someone else at 6%. So I pray that we can pull that off, because that would create so much opportunity in the market. I just don't know how they're going to pull it off.
Okay. What about the elimination of the 620 FICO score for any mortgage loans?
Okay, so that is something that's actually kind of neat. And again, just like the 50-year mortgage and this, there's all the outcry. It's going to be awful. It's going to be end of everything. It's going to be 2008 all over again. No, it's not. All right, it's just not.
Okay.
Right? VA, FHA haven't had this limit on the 620 FICO. So if you wanted to get a conventional loan, just a normal, regular Fannie Freddie loan, that you had to have a 620 FICO, or they're not even going to look at it. Like, as soon as it's 619 or below, you don't go into underwriting, right? You're just not qualified. But VA, FHA have had it forever, where they will at least look at it. So it doesn't mean that they're getting a loan. It means that it can go into underwriting and actually take a look at it. Now, what's really neat, and it's just now starting to come out, is they're talking about changing the FICO creditworthiness system. Because FICO looks at your last 5 or 7 years and weighs everything easily. They're talking about eliminating FICO as the credit-worthy system, right, and going to Vantage 4.0 or FICO 10T. I don't know why they name it that, but whatever. These are actually pretty neat because they actually weight things closer to the last 24 months than the last 5 or 7 years evenly, and they include your rental history as part of your score. FICO doesn't. So think about people that have paid their rent forever, they've got great rental history, but they've got that cell phone bill that's a disputed cell phone bill from 5 years ago that went to collection. They're saying it's not my bill, but it shows up. It counts against them in FICO, and they don't get to include their rental history. But with Vantage 4.0 and FICO 10T, it's going to not weigh that that very heavily, but will allow them to include their rental history. So that's pretty neat.
So what's the biggest problem we face right now? Is it the interest rates? Is it home prices here in San Diego?
It's a housing shortage. The country is short 6 to 10 million structures. That can't be fixed right now. That's not going to be fixed anytime soon. It would be great if we could, but it can't be fixed anytime soon. So that's why these things with this 50-year mortgage, the portable mortgage, the change in the FICO, these are going to be temporary bandages. Now, what's going to happen is, I think, when you have the high prices, which is due to supply shortage, we combined with high interest rates, that's a big mountain to climb. That's pretty tough. I think, and I don't think, I know that interest rates are going to come down, and I can tell you why. Trump wants them down. Powell doesn't. Powell's the chairman of the Fed. Powell's term is up in May. Right? That is a presidential appointed position. We know that Trump's going to appoint a loyalist who will bring interest rates down. Now, it's a double-edged sword. Interest rates will come down, but also there's going to be a flood of buyers that are going to hit the market at the same time. And we can go back to bidding wars. So, yes, the play is get your house today at the price at today's interest rate, and then refi come summer.
Okay.
That's
so you're saying to buy now. Don't
buy
rent.
now. Yeah, don't get yourself in a bidding war that's going to come once interest rates come down. We start to see things low 5s, high 4s. All the buyers are going to flood the market, and now you're back to bidding wars. You're going to pay a lot more for the house. If you buy it today, you will pay a higher interest rate, but you're going to get the lower price. When June comes along, new chairman of the Fed, lower rates, refi it.
All right.
Look at that.
So we'll rewind the tape and have you back in a few months and see if you were exactly right.
I'm not going to be wrong.
Okay.
I've been doing these things for 5 years. I haven't missed yet.
All right. Jim, thank you so much.
thank
Appreciate
you.
your time.
If you enjoyed this video and you want to watch more videos like it, be sure to like and subscribe so you can stay up to date in the latest real estate trends and developments. I'm Jim Bottrell, the Jim Bottrell Real Estate Team. I'll see you next time.